Good morning, everybody, and welcome to Beat the Bell presented by Kane Capital. It has been a hell of a week of trading. We have had a ton of fun in the Discord, particularly 2 days ago when we got the sell-off rejection off of the trend line that we were talking about on the show. If you all remember, we were debating, will we break over that daily trend line extending from the highs created in January 22 before the bear market started? Most of us said that we were going to, in fact, break through, confirm over that trend line. Some people thought it would be a fake out, but nonetheless, the majority vote was that we would cross through that trend line, and the exact opposite happened. And funny enough, the market, if you remember, actually got some news that J-Powell had COVID. It's just very, very interesting how this news comes out at crucial points. But anyways, we rejected. The market sold off nearly 100 points intraday. Right now, we're getting a little bit of a bounce. Looking at the futures, we're up about 6 points. So generally flat going into what is an OPEX Friday. So we'll have to wait and see what the trading looks like today and how we finish out the week. But to talk about what we saw this week and what we can anticipate moving forward, we have an awesome panel with us this morning, starting with Money Mander. Mander, what's going on?
Morning, happy Friday. Crazy, we're already 3 weeks into the trading year here in 2023, but pretty also crazy how we were hitting on the retail sales numbers, all the data that printed live on Wednesday. We were kind of confused how we were up in green. I was one of the people that thought we got the fake breakout, but as we opened, markets completely rejected the data, rejected the trend line, and I think we're down about 100 points here.
It's true. All right, Noah.
What's going on, guys? Happy Friday. Should be good trading today. Excited to get after it.
Mo Mamba.
Sorry, having some trouble
Mo,
here.
you're on a live show, brother.
Yeah. I know. Sorry, guys. I'm at the in-law, so I'm having a little bit of trouble on my end. But good morning. Let's get it. I was one of those that said we will not get through that fucking trend line, and we did not. We dumped, 8 points? Almost 8 points that day. So let's look for some continuation. Let's just get this dead cat bounce over with and continue dumping, please. Let's go. Let's get it.
All right, Snipes.
What's up, guys? Let's get another bag today. Let's get some more wins, and let's have a nice and easy trading day.
Ramsey Rippers. Everybody's like fumbling around right now. I don't know what's going on.
Yeah, good morning. I just spilled coffee everywhere, so that's what I'll be taking care of when Fed forecast is on. Unbelievable.
All right, Fed forecast. Let's get into it. Money Mander and Diamond Trades. What do you guys got for us? What did we learn this week?
Start with the calendar. All right, let's start with the economic calendar. Give me 1 second. Okay. So for today, we just got Harker's speech at 9 o'clock, existing home sales at 10 o'clock, and then Waller is going to speak at 1 o'clock. So a couple of Fed speakers today that we're going to have to pay attention to. Outside of that, we had jobless claims yesterday. The weekly jobless claims come in 190K versus 214K expected. So the labor market continues to chug along, right? And weekly jobless claims actually dropped to the lowest level since September. So that strong labor market has really been bolstering the bull case for a soft landing. As inflation is sort of coming down, we're not seeing unemployment really rip higher. And so that's giving some people some confidence that, we may be able to get out of this without that, hallmark really high unemployment rate that is sort of paired together with a recession and high inflation. So it'll be interesting to see how that plays out. There's still about 1.7 jobs available for every one person who's looking for one. And as we talked with Markets and Mayhem on Tuesday, that's largely the result of wealth effects, right? After the booming stock market and the booming real estate market over the past couple of years, people have their savings padded and don't necessarily need to go look for jobs as aggressively, which is why you're seeing this sort of phenomenon that, the labor market is still really, really tight. And the Fed sort of wants to see that loosen up. So we're going to have to monitor that into the next coming weeks and quarters.
Absolutely. And so what did we learn this week? To me, what we learned was the labor market still is remaining alarmingly tight despite all the monetary policy. And so this is what I wanted to segue right into. while I do agree, this also bolsters the case for the soft landing that we may be able to get inflation down without destroying unemployment rate and skyrocketing that. Look at it historically, right? It's really realistically kind of impossible to do so. And it makes sense in the hypothesis and it sounds great, but realistically, until this wealth bubble that Diamond just hit on is broken, I don't see how they can bring down inflation to the long run price stability levels and a long run price equilibrium that's going to have to happen without destroying that wealth bubble and subsequently raising unemployment. Because while you have people still voluntarily out of the workforce, that clearly shows they still have a ton of money left over from the QE we had post-COVID, the stimulus checks, the stock market went through the roof, housing market went through the roof. People were making so much money, they are still at the point where they haven't had to feel that stress to re-enter the workforce. But until that stress is put on, how is inflation ever going to come down? Like, how can you truly not destroy, but bring down the demand side of the economy without rupturing that wealth bubble? So that's what I wanted to hit on. And on that same note, let's go into Microsoft here, because Microsoft just joined the club of all the other mega caps to announce some layoffs. And so they just announced a 10,000 job cut and lowered revenue guidance for the upcoming quarter by 1.2 billion. So far to me, as we get into earnings season coming up here very shortly, right? We had a Goldman Sachs massive miss. We had a Procter & Gamble massive miss. Netflix just came out yesterday, missed on EPS. So as big tech continues to cut employees here, lowering revenue guidance even more, we had a bunch of guide downs going into the holiday season last year. So they're guiding down on top of already guided down revenues and predictions. I'm just holding to my thesis here that I think last year we got the inflation crash that we sold on inflation fears. But now as inflation kind of comes over that bell curve and we get to lowering inflation, I think everyone's of the synopsis, we're past peak inflation, right? I think now we're getting to the point where it's going to be an overvaluation system that kind of sends us lower, because right now the Shiller PE remains at 30, which is it's a inflation adjusted PE ratio of the entire S&P 500. It's only been above 33 times over the past 150 years with an all-time mean of 17. So all that's saying to me is stocks, even where we're currently trading at, are overvalued. And as these EPSs start to come down, which I'm anticipating because you have higher borrowing costs, we're seeing that, right? Why else would they be laying people off? Revenues are not where they're at. They're trying to cut costs. Stocks are going to have to come down even more aggressively, right? To lower that ratio on top of lowering EPSs.
Right. That's a great point. And, talking about Microsoft, talking about tech, let's move right into the Netflix earnings. That was really the highlight of the earnings season, or the earnings week rather, not the earnings season. We can go into Netflix earnings. So Netflix actually got a really nice pop, and I want to make sure that they're still trading higher here in after hours. Still trading higher in after hours. They got a really nice pop after earnings yesterday, despite their EPS miss. So they actually missed EPS by like 73%. EPS came in at 12 cents per share versus 45 cents per share expected. Revenue came in at 7.85 billion versus 7.85 expected. So basically right in line. The stock traded higher because they smashed Wall Street's expectations for subscriber growth. They added, I want to say 7 million subscribers in the quarter. And that's almost double, not quite double, but almost double the Wall Street expectations. So that outperformance in subscriber growth is why the stock popped. They also had CEO and co-founder Reed Hastings step down from his position. The Journal reported that Netflix actually missed EPS largely due to euro-denominated debt. So it was more like on the financial side rather than the actual business. It wasn't necessarily an operating loss. They didn't disclose what portion of those new subscribers are for the ad-supported version of the service that they launched in November, and they gave revenue guidance of about 4% for Q1 2023, which was higher than expectations, analyst expectations of 3.7% revenue growth for Q1. So tech earnings started out with, not great numbers, but pretty decent guidance, right? With the guide up there in terms of revenue and the subscriber growth from Netflix. So we'll have to see how the rest of tech comes into report next week and the week following, but that's going to wrap it up for us here on Fed Forecast. We'll pass it back to Alejandro.
Beautiful, guys. Thank you for that. We're going to move over now to the system. So let's talk about the sell signal that we got this week. This was literally the picture perfect trade, guys. It doesn't get much better. On Tuesday of this week, I came into the market looking for a trade. I had been trading for a couple of days. I couldn't really find anything. I knew, just be patient, because really what my main focus was, and what I didn't like was the fact that we were, of course, testing that daily trend line that we had talked about on last show. I'm sure you've seen it everywhere on Twitter. And I knew that that area would be kind of sticky. So I felt that the best play was not to necessarily predict, would we reject, would we break through, but to rather react. And I used the system to help me out because I was looking for this sell signal trade. So as soon as we broke down below the 50 SMA on the 30-minute SPX chart, I went in short the MES futures. Okay, that's the micros. I went in short with a 15-point stop. The reason I use a 15-point stop is because if we take my stop out, that also means that we got back above the 50 SMA and my trade thesis would be invalidated. And so I got short. As you guys can see, this trade worked beautifully. At the peak, I was up about 95 points, ended up walking away with 70 points on the second half of my position. I trimmed the first half of my position at the 50 SMA on the 1 hour SPX chart. Luckily, we broke down below it. You can see how it flipped into resistance. We traded lower. And yesterday, we rejected off of the 10 SMA on the 1 hour chart. So now, what is it that I am focusing on today and going into next week? So we now know that bears are still in full control, and any rallies under the 50 SMA would be considered fake rallies. We got one yesterday. Intraday, if you guys remember the squeeze, it almost looked like SPY wanted to close green, but we rejected, came back down. These type of movements are a little bit trickier to trade because you really need multiple areas of confluence. You can't just use the system. You can't just use key levels of support and resistance. It becomes a little bit trickier once we start to see this 10 SMA flatten out. So when the 10 SMA starts to flatten out, and look at how much of a downtrend, or how strong rather of a downtrend it was in on this sell-off. See, it was coming down hard, and then it flattens out. Now it starts to get a little bit trickier because the market is clearly slowing down. There's less momentum, okay? So right now I'm just sitting out, especially with OPEX Friday. I won't be doing any trading today. The market is typically unpredictable on an OPEX Friday, but going into next week, we're watching the 50 SMA on the 30-minute chart. That is going to be of highest importance. If we can get back above, that's of course bullish. As long as we're trading below, that's of course bearish. I hope that you guys were able to catch this trade this week. I did tweet about it before it happened, obviously alerted it in the Discord, and we were able to do really well there. But that's going to do it for the system, guys. And now we're going to pass it to Ramsey Rippers for Bet the Bell.
All right, guys, let's go. Bet the bell. Market a little bit green in the pre-market. Nothing too crazy. SPY and QQQ relatively flat. So with that being said, guys, I mean, we spoke about it a little bit earlier. Netflix, they crushed earnings yesterday, trading up here in the pre-market after hours. Green or red today, Mander?
I'll say green. I mean, we just had such an aggressive sell-off over the last 2 days. I think we could see some type of short covering dead cat bounce here.
Dwayne trade.
I'm gonna go green as well.
Diamond.
I like green today. I like green. I think I agree with Manor, right? We had such an aggressive sell the last couple of days. I could definitely see that dead cat bounce.
Alrighty, Sniper.
As the defending champion of this part, I'm gonna have to go with green.
Oh. And Mamba. Mo Mamba.
We might have lost him. Oh, there he is.
There he is.
I'm back. Sorry. What's up? Oh,
Green or red?
Oh, yeah. I think green.
Okay, I gotta switch. I'm going red.
Dude, we are so
can't do it. The whole panel goes green. Nope.
I don't think we've ever all said been on the same side. Right?
Nope.
Dude, I
can't
might
do
just
that.
fucking load the boat on puts right at the open.
Wow, damn.
Oh, God.
Where was this when we were at the trend line? The fuck? And now everyone's going against me?
No, it's because
No,
everyone
we all said green.
Oh, okay.
Every single one of us.
Oh, okay. Got you. Yeah, dead cat
Green.
bounce.
That's why we're like, it's kind of fishy.
Lock it in. Everyone's green. I'm excited to see what happens. All right, second question. So back to that, the Netflix earnings debacle. What are they? They're up 7% in the pre-market, 6.5% at one point, on the top of that earnings scandal. I believe they were up almost 10 to 11%. What I want to know is, will Netflix outperform the NASDAQ this year? So let's see. Who do I want to answer this one? Hondo. Let's hear it.
Oh God. Dude, I'll be honest. I don't know much about Netflix. My answer will be no. And the reason why I'll say no is because Netflix actually had a pretty good second half of the year. After a couple really, really poor earnings reports, nobody liked Netflix. What was the low? Something around like
162.
trading sub 200.
160.
Yeah, 160. So it's made quite the rally off of the lows. So I think, when you look at Netflix relative to some other names, upside potential versus downside risk, I think that it's one of those that isn't as appealing to the long side at these prices. So I'll say no.
It's fair. Money Matter.
I got to say the same, and I wanted to get this out during Fed Forecast when Noah hit on it. But right now, off that recent EPS, this puts Netflix trading over a 30 PE right now, which I think is totally unjustified, especially given the rate environment we're in right now. I don't see how a name that's kind of dying. They doubled on subscriber growth, and then it's the new CEO thing, same thing that rallied Disney. And like Mo will have to get in here after me. Like I don't think this outperforms the NASDAQ at all.
All right, let's go to Diamond.
I'm going to go with underperform. I still think, to Mander's point on Fed Forecast, you have a lot of companies with still lofty valuations, and I think Netflix could be considered one of them. Obviously, they're a growth company still, regardless of the recession, but I'm gonna go underperform for this year.
Pretty strong no for the panel as far as if Netflix outperforms the NASDAQ this year. This is going to lead us into the third question, which is, yes, Microsoft and Google. I want you guys to think about those two names. If you had to choose, which one are you adding to your long-term port? I want to hear from everyone here. Microsoft or Google? Let's start with Mo.
Microsoft or Google long-term port? Damn, that's honestly, man, I can't give you a reasonable answer, but I'm just gonna go with Google. I'll just go with Google.
No Bill Gates.
Yeah, no, Bill Gates, man. Google.
Tonight.
Yeah, I'm gonna have to agree with Mo. I got to go with Google. Google has lots of data. They have lots of different things going on. I like what they're doing with YouTube Shorts. I definitely am gonna have to go with Google over Microsoft.
Diamond.
I'm gonna go with Google, and I don't want it to be like I'm jumping on the bandwagon. This is really my favorite name of all the stocks. Actually, I love Google. The business is ridiculous. Obviously, their moat is absurd, and so yeah, it's kind of a no-brainer for me.
All right, Mander.
Keep it going. You already know where I'm at. I love Google. I've said it multiple times on here. And on top of everything that Diamond just said with their moat, remember the hype that just came out with Chat GPT or whatever, right? As AI continues to develop, who's poised in a better position than Google? Who has as much data on file as Google has? So if that really becomes the next evolution of what could be the next Amazon in terms of growth in AI, I think Google's in the perfect position with all the data they have.
Alejandro?
Dude, Chat GPT is so sick. If you guys haven't tried that out, check that out.
Google.
Yeah, this is not how I wanted this question to go. I thought there was going to be a little bit of
Wait, I think we all have the same answer for all three questions?
Yeah, everyone was green. I only asked 3 people about the Netflix underperform, and everyone chose Google. Well, before we pass it back to Alejandro, we got a new surprise segment that actually none of the panel knows about except for myself and our producer Ryan. New segment alert. It's called On Blast. So that is a prototype. That is a pretty not the best.
We need some audio on that.
Well, we just came up with it this morning, so we had Ryan work really quickly to put it together. Basically, On Blast is I'm going to pick one member of the panel and ask them a question that they have absolutely no idea is coming. And usually it might be putting another member of the panel on blast while I'm putting the one that I'm asking the question on blast. There's so many on blast. It's absolutely insane. It's blowing my mind right now. So the question of the day is, which member of the panel would you most like to manage your money, and which one would you least like to manage your money? And let's see, who am I going to go with? I don't want to catch anyone off guard. Snipe.
Which member of the panel would I like to manage my money the most, and which one would I want the least?
Yeah.
Dude, someone's going to feel real good about themselves after this, and someone's going to be crying after this.
Let's go.
Putting them on blast.
Shit, I think I'm going to have to pick Mamba for the most wanting to manage my money. And I think I'm going to have to pick Dwayne Trade for least one.
I knew it, you fucker.
The fuck
You
is this?
fucker.
Come on, dude. That wasn't very nice.
No
All right, you
comment.
heard it from Snipes. Mo number one, Dwayne not number one. That's going to do it for Bet the Bell. We'll pass it back to Hondo here.
All right. Thank you, Ramsey. Now over to Mo Mamba for Mamba Market Analysis.
Let's go. All right. So bear with me here. Bear with me. Is my screen showing up?
Yep, you're good.
All right. All right. Cool. Cool. All right, we're gonna go with the S&P here. This is the daily time frame. My computer sounds about to blow here. All right. So SPY, major trend line. We went over that. Nice sell-off. Now, big thing we're watching was this daily demand down here. We blew through this one. This wasn't as strong, right? But it was a demand zone when we were above. We blew through it, closed below, and then expected further downside, right? Look at the close. You close below this open and through the daily demand zone, expecting further downside. Big level I was eyeing was this gap fill. So I was expecting, you know, a slight gap up maybe, and then we continue to flush through down here and test this demand. But this was the big level I was watching for, to see if we're able to maybe test this demand zone, come back and close above for a dead cat bounce back into what is now our supply zone up here, our daily supply, reject, and then further downside. We did not get that. We gapped down actually a few points and then sold off, ripped, and then sold off. But the rip never filled the gap. So when we gapped down yesterday, we had a gap to fill now to the upside, right? We never did fill the gap. We were about, I would say, like 30, 40 cents off from filling the gap. We never filled the gap to the upside. So there's still about, I would say, like 30 cents there, right? We are up a few points. It's a hard read right here. I got to be honest, it is a hard read where we will go. But I think the first maybe 30 minutes of market direction, I think we get a trend day today. In my opinion, I do think that's where we'll head after, you know, once we get that direction in the market this morning. Because this close right here wasn't as strong. We closed right on this daily demand. So this daily demand right here is a 2-point daily demand from 388.6, well, 2.3 points, right? So from 388.6 to 386.3. So about 2.3 points here. We closed right on top of it. Not the strongest. I do pay attention to how we close, and this isn't the strongest. So this is not giving me much confidence and further downside at the moment. The big thing for me is if we do clear this daily demand. The big level, of course, that the lower part of this demand, the 386.3, we're able to close below. I like this with further downside, right? Back to this range, right? This range right here from, I would say, yeah, it is a huge range right there. But in the beginning, we were really chopping around between this 383.3, let's say, right? So I'm eyeing a move to that 383.3 if we do close below the daily demand. But if we do end up coming back up and closing above this level right here, this 390.5, I like a retest of this daily supply up here for a nice break, hook and go. You can draw a little path. This is what I mean for those that don't know the break, hook and go. And by the way, just to let you guys know, this is not something I'm saying guaranteed to happen. Some people were taking this as, you know, I know what's going to happen. I knew we were going to reject the trend line. That's not it. I've had some people, comment on Twitter about that. That's not it. I never said that once. Nothing's 100% guaranteed. I'm just giving you my point, my analysis on the market, and then I could be wrong. I've been wrong many times before, right? But this is what I'm seeing at the moment. This read, I can't get a read. I'm just taking the initial direction today for a trend day and seeing how that plays out. Hopefully, today's close will give me a better read on the market direction. One other thing I wanted to hit on was Netflix, right? The infamous Netflix. So, big name, nice earnings pop here. What I over here on this one is we're right at this gap fill level, right? This 332.85. We're about 2 points above that. Now, if we sell off and we close below, that's bearish to me. That's indicative of downside. Why? Because this is a gap fill level. We filled the gap. You can see how we rejected it up here and then up here, and then we sold off, right? If we come back down, fail to hold this level as support, that's weakness. Just as you're playing your 5-minute time frames, right? Your day trades, you blow through resistance, you come back down to confirm support, you fail to hold that level that was once resistance into support. What happens then? Most of the time, if not always, further downside, right? The same way I'm looking at it on the daily time frame. You fail to hold this gap fill level as support. I'm looking for further downside. This is going to be on my watch for a potential swing if we do fail to hold support. That's all I got for you guys today.
All right, thanks, Mo. We're going to do a member spotlight now, guys. So there was one member this week that really stood out. The guy's actually been crushing it. Dr. Drake. Dr. Drake. So, Dr. Drake, what's his story? He's up 45% this past Wednesday on the port. He's ripping. I saw he was he took an options trade. I think it was Snipes, who unfortunately got stopped at entry on the other portion of his position or whatever. Snipes is shaking his head. You can speak.
That trade went 30%, and then I got stopped out of the other half, and he held them.
All right, so exactly what I just said.
You said I got stopped.
I said you got stopped at entry.
Dude, you didn't even get stopped at entry. You exited for 100 for a bag. What are you talking about?
That was my second trade.
Now we're talking about the first one. So anyways, Snipes alerted an absolute ripper. He gets stopped at entry on the second half. Dr. Drake, however, has the fucking stones. And this man held this thing to like 1,500% or something. Just crazy. But he's killing it. Doing a really good job in the Discord. So we wanted to recognize him. It's always fun to see the members crushing it. Honestly, this was probably the hardest week to pick somebody because we had so many people. If you guys go in the gains chat, there were so many people that were doing really, really well, making a bunch of money and up on their portfolios. So we had a ton of fun this week.
You know why he nailed that trade? Check out his profile photo. He's Tommy fucking Shelby. That's why. Fucking Peaky Blinders. That's why he nailed that shit. Let's go, Drake.
Mo is back. Mo should have been fucking member spotlight this week. Mo's hit rate this week was insane. On Wednesday, he was 5 for 5. I don't think we've had a loser in like 2 days as a team. We're just absolutely crushing it.
Yeah, the whole team's killing it.
Yeah, it's been so much fun. But all right, let's quickly do our top watches now. So we'll start with diamond trades. You don't have one?
I don't have a top watch, but I'm already in a trade. I longed 39.22 on ES, so that's my top watch.
Okay, that works. All right, Mander.
Here we go again. So this is actually an Amazon chart, but if you guys remember from last week, I was watching this for that lower trendline resistance, the falling wedge breakout. Once we got it, next resistance was the overhead trend line that I have on the chart here, which we got an initial rejection of and then a shooting star candle off of on the sell on Wednesday. So if markets continue to roll over, I'm watching this one for continued downside bias. I am currently in swing shorts on this, but that is my top watch moving forward.
Ryan is literally fired. I'm scared to even do the next one.
Nah, he's got it. Let's do it.
Holy shit. Everybody brace yourselves. For those that didn't notice, that was an Apple chart, or that was an Amazon chart, and you put Apple. All right. Who do we have next? I think we have one more. Ramsey.
Dude, okay, he has to be doing it on purpose. This is Google. I don't even want to do it anymore.
Yeah, it's not funny.
Yeah, screw it. No time.
Yeah, fuck it. All right. Thank you, everybody, for tuning in to Beat the Bell. We hope that
Dude,
you
what
had-
what? Okay, get him out of here. We need a new producer. Guys, please email
Yeah.
support@kane-capital.com. We're looking for new producers who can
We're
type.
looking for producers who take shit seriously. All right. We hope you guys had an awesome trading week. Insane week in the Discord, as we had talked about. The hit rate was up there. But yeah, it was a lot of fun. Be careful today. OPEX, manage risk, do what you got to do, end the week strong. We'll be ready to get after it on Monday morning. We'll, of course, be live on Monday morning at 8:30 a.m. Eastern time. Enjoy your weekend, everybody. Have a good one. Last thing I'll say, for those that aren't aware, we trade live all day, every day in the King Capital Discord. You can go to kane-capital.com to join. But we'll see you guys back here on Monday morning, 8:30 a.m. Eastern. Have a great, great weekend, everyone.